Most founders, if you talk to them, are super secretive about their exits, the numbers and the details.
Heard of people that sold their company that got $0 upfront?
I thought that the day the money hit the bank would be rainbows and fireworks, right? You expect that to be the biggest moment of your life.
Hey, David, do you remember this?
What's up? Oh my god.
This is the happiest day / most traumatic event of my life. This is actually our full acquisition document. And I think today we want to get naked, right? We want to tell everybody about what it actually means to be acquired. I think that has been a very constant question that everybody asks us.
Yeah, dude, that document, so much PTSD, so much time into it. I never want to deal with lawyers again. But today, let's break it down, right? Most founders, if you talk to them, are super secretive, wishy-washy about their exits, the numbers and the details. But today, we're going to break down everything, get naked, be clear about all the details and our stories.
Yeah. Also because we sold for 4 years already. Nothing to be secretive about.
But that actually is the first problem, right? Because if you look at, there are people who came to me and be like, hey, why are you lying about how much you sold it for? Because if you look at the different headlines from different news articles, they would have different numbers.
Yeah, it was very weird. During that period, like, news articles started popping out. And the funny thing is, nobody actually asked me how much I sold for. I don't even know where they got the numbers from. They just like pull it out of their ass. And like every single news article was saying a different number.
Okay, so the first part is, hey, why are we lying about how much we sold it for, Josh?
I think for an acquisition, like most people look at acquisition, they look at the headline number. But a lot of numbers actually go into how they actually come up with that number, right? So the only people that really knows how their money is being calculated, it's really from the founders, only the founders, and this document. Yeah.
Yeah. So I think what we realize is that, hey, not all the numbers, the headline numbers is not real. And here's the incentive, right? The incentive is that on our level, right, we want the headline number to look as large as possible. Even the acquirer wants a number to look as large as possible.
Yes.
Right? But within that headline number, actually, it's not every number in the headline is real. Right? So let's say let's say the headline number is 15 million. What does a 15 million mean? 15 million doesn't mean you get 15 million upfront. It depends on their degrees of realness to the numbers, right? So for us, that 15 million or 13 million or whatever, maybe 70% is upfront.
Okay.
Another 30%, 25, maybe another 25% is based on us hitting certain performance target. And then there can be, again, it depends, the money is really made in the structure, right? It depends on how much the rest of it is based on upside performance. So there might be a profit share agreement of saying, hey, for every $1 million in profit, you get 5% past every $3 million in profit in year 3 onwards, right? So there is a huge range of variability, but the key takeaway is only the number that hits the bank on day 1 is real. Everything else, you need to put a huge discount rate on it.
Yeah. And I think this is the part where a lot of founders, or at least acquisitions, are generally very secretive, right? And what I have learned about acquisition is a large part of the details, the devil in the details is the terms. And that's exactly what you say, right? Because depending on how much people get upfront, and I've heard of people that sold their company, they got $0 upfront, and everything was just performance based, right? There are things that like it could be incentives, it could be how much you give to your employees in order for them to stay. There are a lot of terms that are built into the contract, but as a media outlet, I want to tell everybody the biggest number. The founder wants to tell everybody the biggest number. The acquirers want to tell everybody the biggest number. But truly for a founder, what matters is only when what number hits the bank.
What number hits the bank? And like, why do you think we do that? Why do you think founders do that? Of like, they focus on the headline number.
Because it's more sexy.
It's sexy, right?
Yeah, it's sexy. If I tell people like, hey, I got acquired for 15 baht, actually I only get like 70% of the money. Like the real money, I still need to work hard a little bit, right? It's too much disclaimers.
Too much is exactly like the headline number can be so sexy, right? And I've heard of terms where you get 0 upfront, everything is performance based, like you said, over the next 5 years. Then what is that? You're essentially buying yourself a job.
Yeah,
it is still a job, right? You have to depend on the performance over the next 5 years.
Yeah,
So
and yeah, there's always that lock-in period also. How long you need to stay, and when you stay, you are essentially an employee with no like real equity upside.
yeah, what do you think is a part of our deal structure that we got right?
We got right. Deal structure. We negotiated very hard on the upfront. We
Yeah,
negotiated very hard. Like at first it was what was suggested? I think 50% or even lesser to upfront cost. And I think when founders ask me this, I think they only think from their own perspective, right? I want to sell and like, oh, people will just pay me a lump sum and then I'll go. But if you think from the acquirer's perspective, they're also scared, right? They're also trying to hedge their bets. It's so like the lesser money that I can give up front, the more I can protect my cash flow and give myself more certainty that if there's certain performance, then I give out and I feel safer.
yeah, 100%. And there's also another thing that one of the reasons we negotiated so hard upfront, so hard for more upfront, is that even if they guarantee you to say, hey, in 1 year's time, we'll pay you the rest, not contingent on any performance, there's another risk that we don't think about enough. So even if it's not performance-based, even if they say, hey, the remaining 20% will pay you out over the next 3 years, there's still a risk. And that risk is the counterparty risk.
Yeah, whether they will go down or not.
Whether they will go down, right? It depends on the strength of your acquirer.
Yeah. As in, if it's a listed company, maybe there's some room. But as we
100%.
all know, like companies can go down any point in time. Like, if you are below, I don't know, $5 billion, you can just go down any point in time. Any tech company can drop 90% in market share. Like, yeah, so there's a lot of risk on whenever there is like delayed payment, that counterparty might not be able to fulfill those requirements, even if there is no performance structure built into it.
Yep, 100%. And the other part is, hey, headline numbers, what does it make up of? Is it cash or is it equity? Because there are plenty of stories of, especially during COVID period, people selling their companies for shares in the acquiring company. And then there's a lock-in, you can't sell for 12 months. And then after that, the whole COVID bubble pop, the acquiring company shares crash 90%.
Yeah.
Plenty of stories like that, right? So, main takeaway is only cash on day one is real, right?
Yeah, bro.
Don't freaking go buy a GCB. Don't go and buy a bungalow, a house based on your expected payout. Spend based on the money that actually hits the bank on pay one.
Yes, yeah. Unless the shares is S&P, like maybe you help me diversify. If not, it's the same as you all in all your assets into a single stock. Like it's hyper riskier.
Right. Yeah. Remember what they asked of us.
Yes. Oh yeah, they asked us to buy their shares, right? Or to reinvest.
Yeah. Right. So there was a point after the sale, they were like, hey, do you want to roll your money into the company?
Yeah.
Not that they're bad acquirer, but the way to think about it, it's concentration, i.e. your business, is how you get rich, but diversification at that point is how you stay rich.
Yes. And I'm very diversified. And everything else since then that I have concentrated on has all went down to zero. Yeah. Do you remember the day when the acquisition idea first came to us?
The day when the acquisition idea first came to us. Oh, you mean when your senior called you?
Yeah. Do you remember exactly what happened? Because it was very vivid to me. Because like I recounted this story multiple times. I was visiting our warehouse, and it was a super crazy period, right? Stocks were all over the place, and I was just trying to fix things on the go. And I had 2 minutes before my meeting. I was on the way to the warehouse, and I received a phone call, and he's like, hey, it's an unknown number. So to me, it's like, probably scam call. Insurance probably. Scam. Then I was like, I got 2 minutes, maybe I just have fun with it. So I picked it up and say, hey bro, you remember me or not? Wow. I'm like, confirm you want to sell me something, right? Call me something. So I was like, no. I said, oh, I'm your senior from school. I currently work at this company, and we specialize in buying brands. Then I was like, oh, first time I hear, because we have never received like acquisition offers. This was like the first time to me lah. Then I just said like, oh, what's your usual ticket size? I'm smart. What's your usual ticket size? What? Yeah, bro. And he said, oh, usually we buy 1M brands. Then I was like, we are too big for you lah. Bye bye. Then I cut.
Bro, you didn't know it then, but you made him want you really more.
Right.
You were playing hard to get, bro.
I wasn't power play because I need to go to the meeting already, and like I had enough fun already. Yeah, and I never heard of the company before. So when I went back and I told you and Jake, right? And then both of you were like, "Hey, bro, it's a real company. They recently raised like 8 figures, and they are looking to buy brands." I'm like, "Huh? Is this the reason why my dad asked me to read newspapers? Cause like." And funny that everybody know except me, right? So then luckily they called back, and then like we went on that whole discussion. Yeah, and I remember all three of us sitting down in front of the founder, and them convincing us to sell the company. And we all sat at a hot pot place after that when we were thinking whether to sell or not. Do you remember that?
Yeah, that I remember. I remember that first meeting with them. It's like, okay, so what were you when we first met them, right? The first meeting, what were your expectations going in?
They probably lowball, because at that point in time I already know that like they are in the business of buying brands.
Right.
In my head is they'll probably lowball us, because if I'm them, I'll do the same, and they will try to convince us that selling a company now is the best thing to do lah. Yeah.
Right.
What was going through your head?
In that meeting, I thought we were meant to sell ourselves, but they did something that made us feel really special.
Okay.
Right? In that first meeting, they had their whole management team being there selling us in reverse.
Oh yeah.
Right?
Yeah,
and I
yeah.
recall, shit, that made us feel really special, like we are really wanted. I mean, I like to be wined and dined.
Huh?
You know, I don't like to go straight into it, and they wined and dined us pretty well. I thought
True,
I thought we were going there and we were meant to sell ourselves, but in fact, they made us feel really special. Each of their management team sat there explaining to us, hey, this is my history. We are part of the management team. We've done big things with IPO companies, with companies that exited. This is our next vision. We want you to be part of this.
Yeah.
I felt so too.
Yeah. Their
Right?
I think their angle going in was like, you have built this baby.
Yeah.
We will help your baby turn into an adult.
Yeah, bro.
Yeah.
Yeah, I was properly wine and dine. I was ready to invite them back.
Yeah. Yeah. And I think it was very surreal, because I think while building the company, selling it has never crossed my mind, because it was meant to be a cash flow business, and at some point we realized we could build a brand, and we were very busy just trying to figure out what is the goal for like the next quarter. And it was always about, there was never about like selling. And I think when you are having traction, typically you don't think about an acquisition. You just continue to build, because you are head in the weeds, right? And when that finally came, it took me a while before it sank in that this actually might be real.
Yeah. So here's the interesting thing. We weren't building to sell, right? When we were building, we didn't think about selling. But when the offer came in, we said yes in practically a week.
Yeah.
We went from not wanting to sell, not thinking about selling, to selling in a week. What do you think happened?
Okay, for me personally, I think we didn't really see personal money for a very long time. And I think for a lot of e-com operators and people that wants to enter e-com, right, they don't realize that for e-com, because of it being like cash intensive, a lot of times the sexy way is to say you reinvest into the business lah. But like, if you're growing very fast, you don't see real money entering the founders bank account. So when a big number suddenly appears, you're like, oh wait, you mean like I can touch and feel this thing? Like I don't need to buy more chairs? Like this one, I can buy a house?
Money can turn into house, not chairs?
Yeah, like, oh, you mean my wedding? I can pay for it? Like, this is real? Yeah. So that suddenly hit me as a realization that like, maybe it's something to really consider. And when I shared this story with some people, they are like, it's your choice, it's your choice for not taking more money out of the business. But I think when we were growing it's very difficult, because you wanna double down on your winning horse, right? Like it just seems logical to me at that point in time. And if you are on a very fast upward trajectory, you don't want to slow down that trajectory. Yeah.
Especially, so people who say it's your choice of whether you want to take money out of business, I don't think they've done business that is cash intensive and growing at a very rapid rate, right? Because e-com is an inventory based business. If you are 50% COGS you have a lot of money stuck in inventory. And if you're growing fast, most of your profit goes back to funding that inventory.
Yeah.
Right. So it's now becomes a choice of like, oh, do you want to continue growing when there's trajectory, or do you want to take money from security?
Yeah.
Whereas what I'm saying is, hey, there's a third option where you can sell and take the win.
Yeah.
And take actual cash.
Yeah. What about you? What was going through your head at the point in time?
Before I go into that, have you heard of the Mark Zuckerberg story?
On what? Buying Instagram?
On when he was when Yahoo, I think it was Yahoo, offered to acquire them.
For like $1 billion or something like that, is it?
Yeah, bro. So, like, context. This guy, fucking 20 years old, right? Built a company for maybe 2 years, massive success, got an acquiring offer by Yahoo for $1 billion. More money than he has ever seen in his life, right? He has raised money, so he has a board to respond to, right? It is not him saying no to it. It's the way he said no to it. It's really the way. Fucking cool. He went into a boardroom. All the board of advisors were there, right? Oh, there's an acquiring offer. He sat down. He's like, all right, we all know what to do about a Yahoo offer. Let's move on. No discussion. No discussion. It's like very clear to him, we should not sell.
Damn.
He's not going into the meeting and like, let's evaluate this offer. He went in. Guys, we all know it's very clear what to do with this offer. We're not selling. Let's move on.
Damn.
But my point is, you are not Mark Zuckerberg.
Yeah,
all likelihood, you
not
are
everybody is a Mark Zuckerberg.
You are not
bro.
Mark Zuckerberg. He was independently wealthy, comes from a good family. He has financial security. Right. This to him, he knew from a young age is his life's game. For me, and I think I shared with you guys, is that we came from the same starting point of our family wasn't well-to-do. All of us have our own stories with loan sharks coming to our place. We come from a place of scarcity. When the offer came in, my main thinking is, this is going to set me up for life. I'm going to get the financial security I never had. And this gives me the space, opportunity to go for the next bigger thing. And we should take the win.
Yeah. For sure. I think this is have you heard of this parable where like you have 2 boxes. One box is guaranteed $1 million, and the other box is 50-50 chance of whether it's 0 or 10 mil. What should you pick? Right.
It depends on the stage in life lah.
That's right, bro. Depends on your net worth, bro. If like the 1 mil won't change my life. Let's say I'm at like 9 figures, right? Like my 1 mil won't change my life. Go for the 0 or 10 mil, bro. Right? Like it really depends on context of who you are. To me, right? If you're financially secure at home, the type of decisions that you make, even when you're growing a business, is very different. So, my advice, if ever an acquisition offer comes to any of you listening to this, and financially you are like maybe not living paycheck to paycheck, but you could do a little bit better, the money will materially change your life. Take the money. Like money in your bank is real.
Yep. The simple way to put it is, if there's a life-changing sum of money, especially if your life hasn't been changed yet, take it.
Yeah, take it, man.
And I do think that the best time to sell is also when you don't want to. And I've thought about this, that we weren't that smart back then. Okay. We weren't that smart back then, but if we were to framework this, there are a few questions we could have answered that led us to this conclusion.
Okay.
One is, when you're evaluating an offer, are you the bottleneck? If you are the bottleneck, be it cash or capability, then there's more reason to sell. The other question is your category freaking hot?
AI.
Right?
Now.
AI like crazy hot, like in a way that you think it's, hey, frothy, it's probably a good reason to sell. You want to sell at the top.
Yeah.
Next question, is this your forever game? To us, to be honest, we weren't selling chairs because we're particularly passionate about it. Hey, sometimes we need to say we are.
Speak for yourself, man.
We grew into the passion. We grew into the passion.
As he was making money, that's why we're passionate.
That is true. I'm passionate about green. But it's not like the kind of thing where I wake up as a kid thinking about I want to design a chair. There's a myth that we do want to tell. There's a separate thing about founding a story. We want to have a myth. But the reality is we weren't. Right? So we didn't think it was our forever game.
Right. Oh, did you hear the story of the guy that kind of the godfather of AI?
No way.
Like I I think basically like many years ago, like 20 years ago, he was one of the first few people that was actually researching AI. He built a company. Long story short, a lot of people offered to buy his company, but he didn't sell. And the whole reason is because he feels that this is, if you're not working on this, which is like the future of humanity, what else are you gonna be working on? Yeah, that is really like his forever game. Yeah.
Yep.
And I guess for Mark Zuckerberg, it's probably the same thing.
It's
like to
probably the
him,
same
like
thing.
that is gonna be the forever game for him. Yeah.
Yeah. And I've met even not, and I think founders might make the mistake of thinking that it has to be something massive like humanity changing like AI or social media for it to be a forever game. But I've also met founders who are doing 5-10 million and they're like very satisfied with the business. And they are questioning to themselves and they have had acquiring offer and they ask the exact same question. They'll be like, if I get acquired, what else would I be doing?
Yeah.
I would still want to run this business.
Yeah.
Then there's probably a signal that you shouldn't sell.
Yeah. It's true. A lot of founders that comes to me and ask me like how to sell, they are generally not passionate about like their category. It's making money. It pays well. But if an offer comes, they will take it in a heartbeat.
Yeah. And after they take it, they wouldn't want to work on their business again.
Yes.
Then okay, that's probably a signal to sell.
Yeah.
Okay, so we got the offer, right? We were sitting in a room with them. We sold in. From the day the offer came in to when we signed the term sheet is almost just 7 days.
Yeah.
And here's a crazy part. The conventional wisdom is that, hey...
Was it 7 days?
Almost a week
really?
or two. It was very quick.
After that meeting with them?
About a week or two. But 7 days sounds sexier, so let's just go with 7 days.
Okay.
You know? You don't want to get into the position of like, it took us 9 hours, 45 minutes here. 9 days, 4 hours, 55. Not that sexy. 7 days is a nice myth. Okay, so we sold it about a week.
Term sheet
and
signed.
Term sheet signed, right?
Term sheet signed. Never sell. Money never hit the bank. It's not really sell.
Yeah. You want to explain what term sheet is?
Term sheet is basically a binding-ish contract that is sent to the sellers that like, this is our offer. Yeah, and with that, it kind of includes like, okay, exclusivity, you don't start shopping around again. We will kickstart the whole due diligence, make sure whatever you tell us before the term sheet is accurate, they look into your numbers, and eventually it's supposed to lead to an actual sale and purchase agreement.
It's a bit like in property terms, option to purchase, right? You're not the money hasn't hit the bank, you're not finalizing everything, but it is a clear indication of this is what I want to purchase your company for, how much there is, what are the deal terms. But in between that and money hitting the bank, there's due diligence and further negotiation on the tiny details.
Yeah.
That being said, the deal still can fall through after the term sheet.
Yeah, the difference is with property is I don't get a deposit.
Oh, that is true. We did. I think we did negotiate a breakup fee. Did we? I don't remember. You can.
I don't remember.
I don't remember. I think you can negotiate for a breakup fee in a term sheet.
Right.
Although I don't know how.
Right. Like, don't waste my time.
How market that
how
is.
Impossible. Yeah. Okay.
Yeah. But anyways, term sheet to signing is about 7 days. Really quick. And the crazy part is conventional wisdom says we should find multiple buyers to create pressure, right? But we actually didn't. What was going through our mind? Why didn't we do the conventional thing and like, let's apply maximum leverage and buying pressure?
Right. Didn't we have one more?
We did have one more. But even then, we were very hesitant about finding another buyer.
Yeah. I think during that period, like, firstly, there is the courtship of the main acquirers, the way that they woo you. Honestly, psychologically, it's very draining because you're on both sides of you're on opposing forces, right? One wants to buy at the cheapest rate and one wants to sell at the highest rate, right? But because of them constantly courting you, telling you that, hey, this is the best deal that we can give, but we will take care of your baby, and like then you need to think of creative ways to counter negotiate with whatever that they offer, and you just imagine that psychological warfare times 3 or 4 if you were to find like other buyers. Like, I don't think I was mentally that strong to be able to power through that whole period. Yeah. So I think subconsciously it's very difficult for me to like just go out and like find more people to
Right, it's exhausting.
ask. Yeah.
And the problem is that they are professionals. Do this to them is another Monday. Negotiating for companies and selling companies is a Monday to them.
Yeah.
To us, it's an Olympic moment that we have never trained for.
Yes.
Right? It is our it's life defining the moment that we sell a company. It's for a lot of people, the biggest event in their life. But you have never trained for it. For them, it's a Monday. And you can see it is not just numbers and figures. It's not just negotiating the numbers. The psychological part of how to make you feel, how to get you on their side. That whole thing is asymmetrical. Like they are so much more trained in that. And when I look back, I realize that's where we entirely lost because we are totally unprepared.
Yeah. It's like, wow, you want to pay me a few $1 million, yet you come down to my office to have coffee with me and ask me about my family?
Yes.
Wow. Like, you actually care?
You actually, right? They use the high friend status move.
Yeah.
Again, I'm not blaming them. I'm not saying they're manipulative. This is, if I would train in this, it's exactly what I would do. Right? Make them feel good, make them feel like a friend, ask about their family, tell them it's your baby, we want to take care of it. Right? To the point where, oh, shit, we see them as friends, as people who care about us. And what do we feel? We feel bad negotiating. We feel bad asking for higher price. We feel bad trying to find another buyer. It's like, it's our fault for like not trusting you for trying to find another buyer.
We were too greenhorn in this whole thing already. Yeah. And I don't blame people. For most people, how many times does an acquisition happen in your life? It's very rare, and you have one shot to practice this thing.
100%. Yeah.
You
know what we were like? We were like the tribes people living in an island who has never seen the outside universe, right? And then they are like the Navy conqueror who has conquered multiple islands coming to us. It's totally unbalanced, right? This is our first time seeing an outside people that there's even this kind of warfare going on, and they've done it every Monday.
Yeah, it's like I'm a girl that has never been on a date before, and for the first time in my life, this playboy come and like pick me up from my house. I'm like, whoa!
Let's just say they made my knees weak.
Hey, that's right, bro. Yeah. So like, I think people underestimate how psychologically taxing it is, and it is not just the face-to-face meeting. It's the texting, it's the different like gifts and like how they give in to the request that you already put out, and it's really like negotiating with a friend. It's like if I negotiate with you, it's just very uncomfortable.
Yes, they made you feel like a friend. Again, I'm not blaming them. That's exactly what I would do. But they make you feel like a friend, and that's when you lose. And the crazy thing is, people think that when it comes to this buyout, it's all numbers and figures, it's all logical. But it is not. It is the same feeling that you have when you buy an insurance policy that may not be the most logical, right? Because there's that friendship component. Same exact techniques, just higher stakes.
Yeah, it's true.
Yeah. And that's the reason we didn't go and like really push for a better deal.
Think like after you come out of the whole thing and you think back, you're like, wow, dumb. Like if you are a consultant, you don't even need to be a consultant. You just need to be a person standing on the outside. Somebody who has never sold a business before, you would have asked like, you never find other people. Like it's just
you never negotiate higher.
Yeah, like why? Like
you never do a bit of a push and pull.
Yeah. That was hard.
Yeah, like I think that is one of the biggest mistake and the easiest trap to fall into if you were selling. Because numbers and figures, ChatGPT can tell about it. You can ask bankers about it. That's easy. That's Excel level. This is the part I think people will be unprepared for.
Yeah. How do you think people get people to sell their companies for $0 upfront? Like, on paper, it doesn't make any sense. It doesn't make any sense. A lot of it is like emotional, psychological. Oh, you've been working so hard for such a long time. Let us take over, man. Yeah, then you just reap the upsides, bro. Yeah. Let us control you, man. Oh, wow.
True.
Hard. Yeah.
True. To be fair, I think acquirers, they are not just buying companies. They're also, we think that acquiring companies are in the business of buying. But not truly. They're also in the business of selling. They're in the business of selling you the future.
Yeah.
right? Which is what they did for us. You remember when you told me about one of the guys? You were like, I really want to work with him.
Yeah. Yeah. For us, saying we figure out, it really means that we are not sure whether is it right or wrong. Like, we are not sure whether is there a better way. And when somebody like who has done things like multiple skills ahead of you, and when they speak to you like, oh, this is just common sense, then you'll be like, wow, I want to learn it. I want to learn from you. You seem like a great mentor, you know? But I think one of the things that we did well, and we really did well, was to push for the deal to be done as soon as possible. And I think this was primarily done by you. I don't know whether you had that knowledge back then on being able to, it is important to compress the timeline from the term sheet to the money hit our bank, right? Because right now, back then, I think the mentality was, if you want to do this deal, do it before Q4. If not, don't be a distraction to us wanting to build like Q4, which is huge for e-com company. But on hindsight, the way I saw it, and when I look at a lot of the deals that are out there, I realized that a lot of deals fall through because the deal momentum died.
Yes.
Yeah, and deal momentum is really, imagine that psychological warfare that we are talking about. Imagine that lasting for 2 months, 3 months, 4 months, 6 months, a year. People will be tired, bro. People will be like, never mind lah. Like, it's okay, I give up. It's okay, sunk cost already. Let's just move on. Right, but because you intentionally compress that timeline, also because they approach us right before Q4 and we don't want them to be a distraction, that really helps for all the things to pull through as fast as possible.
Yep. I mean, it was accidental. I want to claim it was a part of strategic genius, but it was accidental, right? The crazy thing here is really sometimes an end-to-end deal from term sheet to money actually hitting the bank sometimes can take years. Ours was miraculous. It was done in 3 months.
But then we tried to compress that timeline because we wanted to chase. Our direction was that Q4 is important. Get the deal done before Q4. If not, don't be a distraction to us. And did you, what were you thinking back then? Did you see that, or you knew that like deal momentum kills most deals?
So looking back, it was an accidental genius move. I didn't know what we were doing, but looking back, it was quite miraculous that we got our deal done in 3 months, because a typical M&A deal, right, end to end, I'm talking about from term sheet to money hitting the bank, can take 6 months, a year. There's a lot of negotiation in between, but we got it done for a deal of this size in 3 months, which I think is crazy fast.
Yeah.
And looking back, I think what we did right, like you said, is to put that constraint of like, we need a timeline. We made it very clear to ourselves. I think maybe, to be fair, maybe on our part, we would have been flexible, but we made it look like it's firm on the side towards the acquirer. And there's nothing to focus and push a deal through, like the momentum of just having, we know this is when we need to close by. If not, it's going to fall through.
Yes.
Right? And I think because we also knew, we talked about this multiple times, we were like, what if they don't want to buy?
Yes. Yeah.
We were very frank. We were afraid of negotiating. We're like, what if they say they don't want it anymore?
Yeah.
But we also knew, when we thought about it, we also knew it was strategically important for them. And putting the extra time pressure really helped focus and made some of the negotiation, like you could be negotiating on very tiny details. It makes it easier to be like, okay, we have a timeline to hit, decide on something, let's compromise, let's something they can give in.
Yep. Yeah. And I think during this period, which if you ever receive a term sheet to buy, this is not the time to celebrate. This is the time to actually pedal on the metal and be more on top of this than anything else that you have done in your entire life. Because you see the term sheet, you see the numbers, you're like, oh yes, like, wow, I can start dreaming about buying my house, buying my car, buying my wife a great holiday. Like, no, this is not the period. This period is where if they want a certain document, you send them in like 2 minutes. Like, you start to clean up everything as much as you can, be super clear on the next few days/months is gonna be the toughest sprint of your life. You're gonna be super tired, but it is so useful that you push through this period. If not, your deal momentum will die.
Remember what we said? We were like, hey, please, until the money hits the bank, don't fucking go and look at property.
Yes.
But then again, of course I did. Some days, first thing in the morning, I'm like, this house not too bad. My house feeling a bit tight and small. Wouldn't it be nice if I had an extra room for the dog?
Set the property value cap to your first payout first.
Yeah, 100% right. Yeah.
Yes. And during this period, I think also a tip for everybody is that your term sheet is not like the terms are binding, right? And during this period is where you can continue to negotiate. Once again, it's a psychological warfare because you think that the term sheet is final. If it is the first time in your life you receive a term sheet, you think that this is like final. It's not. They can drop the ball. You can drop the ball. Like both of you can choose to be like, okay, I don't want to do this anymore, right? It is one part scary. The other part is also where, as founders, it is your time to start negotiating. Yeah. So
True.
this period, negotiate like hell, man. Like
especially on the tiny details.
yes, especially
Right.
on the tiny details. Yeah.
To be fair, my understanding of term sheet is that it is almost like a gentleman's agreement. As far as I understand, it's not super legally binding. It is a gentleman agreement to say both parties will enter this negotiation of the finer details in good faith. The term sheet draws out the overall 90% of the structure of how much the money is. Right? I think where the negotiation can come in is on the edges of the details, not so much like if you agree to sell for 15M, you can't suddenly be like, I want 25M. You can, but it's not the nicest thing to do because again,
it's not very gentlemanly.
It's not very gentlemanly. It's not legally binding at that stage. 100%. So let's go through that, right? We got our money, we got about 75% upfront of the about 14 million. Right? Part of it goes to the money upfront, part of it goes to the employees, part of it goes to us. We got 75% upfront. There's another 25% that's meant to be the payout in the next 1 to 2 years. What went wrong here?
My God, you pulling out the dirty laundry, bro. So for us, that 25% was a revenue target. If I never remember wrongly, we need to hit a certain revenue target in order for us to unlock that 25%. During that 1 year, it is also fair for the acquirers to then look into the details, right? Because your due diligence can only go that far. You can go quite deep, but it can only go that far. During the period of that 1 year where they really understand your business, that's where they really start to understand a little bit more of the numbers. And what do they call it? Warranties? Is that what they call it?
Warranties.
Yeah, warranties. It's like if you buy a table, you have a 10-year warranty on the chair, on the table. There are warranties to these as well. On so what do we guarantee?
In a business sale, warranties are basically saying, hey, when I sell you this business, I guarantee that there isn't a lawsuit, there isn't some hidden losses, that the numbers are fair and accurate, things like that. You are giving a warranty that the business that you're selling has no defects or no falsifiable numbers. Those are at the beginning, they'll do due diligence, but some of these things, they're saying, I can't uncover all of these at the stage of due diligence.
Yeah.
If they want to uncover everything, the due diligence will take a very long time. And hence what you need to do is that you are saying, okay, I'll give you some warranties. If there are certain things wrong with the business, if the numbers I give you are not accurate, right? If the stock count, you say you have $500,000 of stock, but when they count, eventually there's only 200,000, that's part of the warranty.
Yeah. So like lawsuits also, like if you don't tell them, nobody will know.
Yep.
During that year is
potential lawsuits that we have here.
Yeah. So warranties are one of the things that you kind of need to fix or give them that promise.
Yeah. So and that's a problem, right? Where valuation, the numbers, the headline number, it's all nice and good, but again, only the number that hits the bank is the real one. Everything else you need to take a discount, because here is where we can get fucked by the structure, the tiny details. And you know why we got fucked by this? It's because we are very used as a small, fast company to ignoring a lot of these small details. Especially accounting related stuff. We'll be like, it's not going to be a problem, right? We'll fix it when the day comes.
Yes.
And this is honestly a mentality you need to change as a small business startup founders, right? We are not super concerned about the legal details because our mindset is we're default dead, right? Let's just do the thing first. Worst case, we get sued, but we are a dead company anyway. If you get sued, then we'll figure out what to do. Right? Small accounting details, we'll figure out when we need to figure out. But that is the mindset that gets you into trouble when you come to selling a company, because this is when the small details matter.
Yeah. This is where you really need a lawyer. And you
A lawyer,
actually need to sit through the legal document, which is super tiring, by the way. Like, the lawyer had a 3 hours meeting. After the first hour, I'm like, what am I listening to? Like, I don't, I'm
Yep.
catching nothing already. Like, it's crazy.
Yep.
It's so taxing. But because you need to, a good lawyer will then be able to tell you when they put in this, what are the potential things that might happen, and these might be
Yeah. So for context, while we hit the revenue target that makes us eligible for the remaining 25% payout, what happened is that we got deducted for a few things, right? One is, hey, they were saying that there are certain warranties that we are not meeting, and hence they have a claim to say, hey, we can pay you less because certain numbers that you gave us are not accurate, and hence they want to deduct they want to deduct the payout from what is owed to us based on that warranty claim. Right? Which, again, if the numbers that we gave them is not accurate, they have a right to do so. But, that is when the legal wording of our original sale purchase agreement matters. But also, it's a kind of thing where, like, is this a thing you want to engage a lawyer for? Right? It's like you can either go and negotiate. And to be fair, at this point, they have the power. They can say, oh, you didn't meet a warranty. We can deduct $1 million from you. Not happy, you sue us. That can be their stance.
Yes.
Right? And then we have to make the call of, like, do we negotiate and be like, fuck, let's just take $500,000 instead of $1 million. Better than nothing. Or we want to go through another lawyer and lawsuit.
Yeah.
Right? So that negotiation, that matters. And there are also other tiny details. One is, hey, if you're negotiating for things like earnout, how exactly do you calculate what? Earnouts will be based on the percentage of profit. How exactly do you calculate profit?
Yeah.
Right? Who is accounting for it? So details like that. There was even a bigger discussion on, like, what is the net working capital? Do you remember? Do you remember that discussion?
Yeah. It was huge. Like, when there's a cut off, how much is it actually there? How much do you take back?
Yeah. Right. So details like these. Hey, because when they are buying a company, or company has inventory and cash in it, right? So you're negotiating for, hey, are you paying the valuation on top of this? Are we able to take out all the cash? Or how much cash/inventory are we supposed to leave in the company? So details like this could make a difference. It's a difference between $500,000 to $1 million.
Yeah.
At least for us.
Yeah. And there are also account receivables. Yeah, all the B2B deals that we have that could be in the millions, and how much, if let's say the client delays payment, does it come out of your 25%? Like, all these things needs to be decided upfront.
Exactly. Yeah. And this is where the tiny details can make you an additional 20-30%.
Yeah, it's
or
huge.
lose an additional 20-30%. It can be huge.
I hated that period. Like, it just felt like I was being taken advantage of, and then, like, I felt like I had no power, and the only way feels like it's either I take a L or I don't see any part of that money for like a year or two if, like, we have a lawyer to kind of run through this whole thing.
Yeah. Do you think we made the right call to find a way to compromise?
Yes. 100%. Because I think nobody knows how a lawsuit would go. The only thing that is certain is the cost of a lawsuit. Like,
True.
Yeah. So, like, I think, if we take the discount and we put that into Bitcoin, we'll made back. So,
Nvidia?
People think, like, I don't know, when I first started business, and, like, the first time somebody sued me, I'm like, oh my god, I'm a real business.
Big enough to be sued.
But then after that, like, I don't know, there are some founders that, at least on the surface, they seem to take lawsuits pretty well. But, like, I don't know. To me, it was to know that there is something hanging in the back of my mind every day. It's just very uncomfortable. I would have made the same decision, taking a compromise on that 25% and just move on and just close this chapter. Yeah.
True.
Could be me being emotionally weak also lah. Yeah, the same as how we got courted.
Let's call it buying sanity.
It's true.
Although I think that what you said, some founders are more comfortable with lawsuit. I think that's actually a competitive advantage.
Yeah.
Right? They are willing to endure pain that most other founders are not willing to.
Yeah.
And that's their way to, right? People who can Founders, I hate it. I don't think that's a way to do business, but founders like your patent trolls of the world who engage in warfare to win and make money,
Yeah.
that's their game.
Yeah, they can be
Fucking
like, oh
annoying.
yeah, I'm in this lawsuit for like 3 years. I'm like, 3 years?
Yeah,
what
the fuck?
Like, how do you
have energy? Yeah, how do you have energy? How do you have energy to focus on other things?
Yeah, it's crazy. Yeah. Okay. So, yeah, I think post due, right? You got all your money, that chapter is closed. Now, value for all the people who have made it this far. Right? You imagine if you are ever somebody that wants to sell your company, if you meet all the criteria that Damon previously talked about, whether you're a red hot category, is there still an upside, whether is this your forever game, all those things, and you decided that yes, at some point I want to sell my company. What do you actually do today? What are some actionables that you can do today?
So you want to sell in 2 years' time? What would you start doing tomorrow?
Yes. A lot of people ask me, like when we go to events, like, hey, I built this company now, it's about $1 million. I want to sell. Like, I want to build it to like 10 mil. I want to sell. I want to be just like you. Like, how would you advise them?
I would say the first thing to do is it's boring. And again, it is not something you're very used to, is to get a proper accountant and get your books in order.
It is true.
Know your numbers, make it verifiable. Because when you do the deal, there's a period where you go into a data room where you're trying to prove the numbers that you have in Excel, right? For most of us at a small size, you just track in Excel, right? It is an estimate, is use some shortcut method to get to the estimate. Get those numbers accurate, verified, right? Because it helps you negotiate from a position of strength. Right? Because you know these numbers are, you know exact numbers instead of like, it's around there, but a ballpark. Then if it's a ballpark, the acquirer will be like, oh, I will discount your ballpark.
Yes. Yeah. maybe 99% of the companies in Singapore all have proper accounting. Maybe it's just us. But but if you are listening and you are just like us, if you want to sell, get your accounts hyper clean, guys.
Hyper clean. I mean, we have accounting, it's just not super clean down to the month kind of thing.
Yeah.
Always paid our taxes. Yes, we are a law-abiding company.
Yes. So, but I think when people think about selling, especially founders that do B2C, right? You have the skills. The goal is to think of your sellers the same way you think about people buying your product, right? You need to be able to position your company. You need to sell them the key feature and benefits. So let's do a masterclass on basic marketing for these people on how to sell your company. So the very first thing for all basic marketing 101 is who is your target audience. In order for you to figure out who is gonna buy you, you need to think who and why. Right? And there are multiple reasons why people buy companies. You've heard of our very famous Mark Zuckerberg buying tech companies just for the talents. Are you a talent farm? You have heard of competitors that are buying each other out because I want a bigger market share. You have heard of old companies, maybe those companies that started in your 60s and they have built like 9-figure business, but still that they don't know anything about Microsoft Teams and Slack and the internet, right? They might buy you just so that they can enter and they can be more relevant. There are high growth companies that might buy you because they want an IPO and they need another company that will look good on their balance sheet, right? So you kind of want to first identify who and why are who are the potential buyers and what is the reason that they might buy you. Why is this important? Because then you can build your company towards the type of companies that they are more attracted to.
It makes a lot of sense because this is not something I've thought about, right? But it makes a lot of sense to say, hey, think about who your potential acquirers are, right? The same way you think about your target audience. Absolutely. But the other part is where I'm not sure about. It's, hey, do you build your company to be one that your acquirer would want to buy? Or do you just build your company the way you should build it and then if an acquiring opportunity come about, and if those buyers are interested, let them buy. Do you build without the intention to sell?
Generally, my philosophy, I think, it is always better to build without the intention to sell. Because I think the way to grow a company is to find what the market needs, and then you kind of scale from there. Depends on how you can grow. But I have seen people that have scaled this way, and in the end, they then become not sellable, right? Because like there might not be companies that want to buy the way that it's currently being structured. So I think if one of your main goals is to be able to sell, it is useful to kind of see the reasons why people buy companies. Because you might not know. Even, let's say, we heard a lot of, let's say, marketing agencies being bought over. What do these acquirers look for? Are there things that you should be aware of? You can build it the way that you want it to be. Are there pitfalls that you should avoid? So for example, maybe if you want to sell, you cannot have one client that does 70% of your revenue. You cannot have one big client because companies won't buy these type of companies. There's too much risk. And so if you are building that company, you're like, okay, I have a big client now. Let me start finding more other big clients so that I'm not having this key customer risk. Right? So just being able to understand the reasons why people buy and who are these potential buyers allows you to maybe think, is this something that you want to go towards? But I would say priority is to always build it the way that you should build for growth.
Yeah. That's an interesting part I haven't thought about, because my pre-existing philosophy is to build a company that you don't want to sell, that you don't have to sell. Right? But I think that is incomplete. Because there is also market reality of, hey, a company that is sellable, where acquirers might want to buy, it might actually be a stronger company. It might actually be a stronger company to have a more diversified portfolio of customers where you don't have a concentration risk, right? It might be a stronger company to grow past 10, 15 million, because you know that the industry only buys past 10 million and say, okay, that then becomes my goal. It is stronger company because you are less likely to go.
Yeah. And to be fair, I think like just understanding whether your company is sellable or not. So take like obvious examples. Tony Robbins, his whole company under his name is probably difficult to sell because his name is tied to it, right? So if you run some form of coaching business and you say that I want to sell my coaching business, a little bit harder. But maybe there are softwares underneath that you market that if you spin it off, it can actually be a sellable company. Right? So I think just understanding what are the companies that are sellable and what are the companies that are not allows you to kind of make decisions if one of your goals is to be able to sell a company.
Makes sense. Yeah. Because I think it goes into what companies are buying, right? Companies would want to buy, acquirers would want to buy companies that they can grow, that is not key man risk dependent, right? And that helps you to be like, start thinking about, okay, if you really want to sell and you're running a coaching business that's based entirely on your name, at this stage, it's not sellable. But if you do want to sell it, then you have to find a way to make it not just about you. Start transitioning it into a company, a coaching company that is not purely tied to you performing the coaching, right? Which on its own could also be a better business.
Yes.
Yeah. Yeah, that's just an interesting. That's not something. Yeah, if you were to do it again, that's how we would do it. Yeah, it's not something we did back then.
Yeah. And yeah, so part two of your marketing lesson is how do you find buyers, right? So for us, it's always Facebook marketing, right? Doing your organic, storytelling, your basic B2C type of marketing channels, right? But if you want to sell a company, how can people think about it? So for me, I think if I were to rethink the way that I build a company, if I want to sell again, I might reach out to investors of companies that might potentially buy me. Talk to the CEOs of companies that might potentially buy me, right? Will they ever be in the business of considering to buy a company like mine? Ask them for a partnership. Think of things that can help you to be known that I am building something. I want to hear your thoughts on how you think about buying companies. And at some point, during that period, I'll continuously update you about the progress of my company, which is essentially what a lot of VC-backed companies do. They always update their investors to say that, hey, this is where we are, this is what we have built, this is our growth trajectory. And that is not only sent to their current investors, it's also sent to other investors that are maybe in the next stage of their fundraising. So if I'm at Series B, I will continuously update my Series C people to know. So whenever I actually start my fundraising, it's not like I suddenly come to you as a stranger, right? I've already nurtured that relationship. I've wooed you. I've courted you. You are constantly excited about my growth. And now I'm ready to take in some money. So I think selling a company is probably the same. You want to be able to speak to them. And even if that buyer doesn't turn out to be anything, the caliber of those people might have networks that they are able to introduce you to as well.
Why do you think what you're saying makes a lot of sense? If you're to run a B2B deal, if you run something long deal cycle, that makes sense. Why do you think founders don't do this?
I don't
I mean,
know.
it makes sense, right?
Yeah. Yeah. I think most of us are okay. First, I think at least for most people, we don't think about acquisition as a potential reality for us. Right? So then putting in the work to get there may not be something that I think about. Like if I'm trying to scale a business from 0 to 1, maybe my top priority is not to find a potential buyer. It's just trying to get it off the ground. Right? But like and it's probably something that I can delay. At some point I can start thinking about it. Yeah. Then maybe in your 1M and above, you think, okay, this has a potential to hit 10. Yeah. Let's start talking to people. Yeah. And obviously if the goal is to sell, which is a huge caveat if you want to sell or not.
Right. Yeah. So what it sounds like is that we don't treat it as like a B2B sales pipeline. Because if you think about it as a B2B sales pipeline, very obvious. It is very obvious you would build relationship with people way in advance.
Yes.
Right? But we don't think about this sale that way. Right? We don't think about my business, selling my business is a B2B sale process. I should start building a pipeline, start building a relationship, start having conversations that will lead to nowhere for the longest time.
Yeah.
And at that stage, you don't have the patience for that.
Yes.
Yeah.
Yes.
And I think the challenge is you need to break out that frame of like, actually, this is strategically the most important thing I can do. Right? It sounds like pointless conversations, but you'll be glad you talk to your neighbors before your house caught fire.
It's true. Yeah. I think especially for D2C people, where we are not used to long sales cycles. Yeah.
Yes, 100%.
Why do I need to invest relationship with like nothing that you're gonna give me? Like, why do people do that?
I don't need you at this stage.
Yeah. For a potential, maybe a tender? No, like, I'm not gonna do that, man. I'm gonna run some ads and see what's my ROAS.
100%. Yeah. I think it's so true. The more cash flowing your business is, the shorter your sales cycle is, the less used you are to this process of the long sales cycle.
Yeah. Yeah. And so the third thing, let's say you have a deal, right? Or you have a meeting with somebody that might potentially buy you. I think it's very common to pitch everything that you have done that is incredible about your company, the people, the marketing, the angle, the revenue, like you just pitch everything, right? The same as if you have run meta ads before. You wanna snipe. You wanna be able to say that this is what you want, this is what we have. And you leave all the other noise aside. And just the ability to understand that and position your company as what I have, what you are lacking, will position you as a great company to buy. And all the other noise are secondary. Yeah, which is a great lesson, because most people, when they come to me and they say like, hey, can you look at my company? These are 1,000 things that I have done. I'll send you my Notion page. I'm like, brother man, why? Like, what you want me to look at? Like, what is like the core thing that you think I need in my portfolio that I will put money in? Right? Like, I'm not going to read through everything. Like, it's too messy already. So you want to target that pain point. Right? You want to target that problem.
It's the same logic as you said of selling a DTC brand. You find your product's best proposition that matches the customer's problem.
Yes.
Same thing.
Yeah, bro.
There's a lot of things about your company. It could be you're great because it's fast growth. It could be because you're in a new segment. It could be because you have an innovative technology, because you have a certain IP. But for any acquirer, not all of those are relevant. You want to use the most relevant advantage that you have and press into the problem that they have, right? If they are a dying company, if they are a company in an old segment, then you want to press on like, hey, we are targeting younger people that you don't have. And that's all that they'll care about.
Yeah, exactly. Like that same example, if you say that, oh, I have talents that is difficult to hire, the old but what the old company is looking for is just to be able to target like younger gen people. Don't tell them about your talents. This is useless, right? They say I can hire as many people as I want. What I want is I cannot figure out the Gen Z marketing. Maybe I'm just buying you just because like you have already figured out. Yeah, so exactly what you said, right? If I'm a legacy company and I want to buy you because I want to understand Gen Z marketing, and you come to me and you say that, hey, I have all these talents that is very difficult to hire and they are like super caliber, top 1%, the legacy company will be like, yeah, cool, bro. Tell me how you do your marketing, right? Because that's what I really want to know. I've tried a million things. I spent $2 million and I cannot even like make one sale from Gen Zs. While you seem like you are doing great, right? And just power through on that problem.
Right. Yeah. Have you heard about how Andrew Carnegie sold to JP Morgan?
No.
So Andrew Carnegie is I'm sure you've heard about Andrew Carnegie, the name, right? But his history is that he was a steel tycoon back in the 1920s, where steel was like AI back then, right? The biggest industries are in making steel. He sold his company, he owned a lot of steel companies to a lot of different steel companies that were consolidated, and he sold it to JP Morgan. And his pitch, right, was not, oh, I'm growing fast. Right? That's not his pitch, right? It's not, oh, we have all this. It's not, we are growing fast. He was very clear. JP Morgan was an ambitious man. JP Morgan wanted to create the first billion-dollar company. Right? So his pitch was very strong. His pitch was going straight into the pinpoint of what JP Morgan wants. JP Morgan is a man. Now it is a bank, but back then he's a man, right? The man, the symbol.
Now he's a bank. Back then he's a man. Yeah, I think most people didn't realize that.
JP Morgan's a man, but yeah. Right, so Andrew Carnegie pitch was, look, you want to create the first billion-dollar company, consolidation in a steel company is inevitable, right? You either buy me and own this future of being the first to create a billion-dollar company, or someone else is going to own the future. Appealing to the ego, appealing to his need, right? And then the valuation was very simple. There was no freaking discounted cash flow model. He literally just put a number. I want to sell it on a napkin. I want to sell it for $480 million for my entire enterprise, all the steel companies. And JP Morgan was like, okay, done.
That sounds like a snap call. You should have asked for more. Bro, snap calls are bad.
Snap call. Again, simplified story, but let's keep it that way.
Nice.
He probably slept on it for a little bit. I don't know if it was a snap call, but let's just call it that way. It's way sexier. Bro.
I hate it when people snap call me.
Not a good feeling.
I need to feel like you feel a bit of pain. Yeah. So that's the third lesson, right? Kind of position what you're solving for to the problem, that the reason why your acquirers are gonna buy you. Same for any DTC brand, right? So be clear on what you are trying to sell.
And the stronger you can press into the reason that they want to buy, the way Andrew Carnegie did, the more negotiating power you come in from.
Yeah. And the last thing that I think, if you ever want to sell, is go and speak to founders who have sold before. Because there are a lot of details that you don't realize that is not public on the internet for you to understand the journey of how it feels like to receive an offer all the way to acquisition. And everybody's experience is kind of a little bit different. Everybody got fucked a little bit different. Everybody negotiated a little bit different, right? So then the more people that you speak to, especially people in your industry, you can then start to understand a little bit more about what are the common things that you need to look out for. Yeah. One of the things that I think we didn't do is to go and speak to other founders who have actually sold. I thought I was a special one. I thought like, nobody ever got acquired in Singapore. I'm the only one. But actually, I could have just looked at our acquirers, who have they bought, to go and ask the founders like, hey, how was it like? What was that process like? Like, what should I take note of? What should I negotiate? What should I press down? How can I position myself to be a little bit better since you have been with them for some time?
100%. Part of it is speaking to other companies that acquirers have bought to see how the acquirers treat the companies that they purchase.
Yes.
But part of it is speaking to people outside of it to understand, hey, what is the acquisition journey? Like basically the kind of conversation we're having right now, what do you need to take note of?
Yeah.
And I think that's logical, but I guess the other mistake that we made is that we entirely relied on the lawyers, which is not wrong. They play an important role, but the incentives of a lawyer is very different.
Yes.
Right? It's not that they want to make more money, but to them, they want to cover their backside.
Yes.
Right? To them, every detail, every possibility is important, right? They need to make sure that if there's this clause, you need to make sure you protect yourself, because by protecting yourself, that's them doing their job. I mean, to lawyers, they want to cover their backside, and to cover their backside, the way they often approach it is every clause, every detail is important. Not ranked by possibility. If there's a clause that says if there's a clause to say that they can make a claim on warranty, that's super important. And that's almost as important as any other clause. Does it make sense?
Yes. Yeah.
Whereas if you speak to founders, they'll tell you what the 80-20 is.
Yeah. Yeah.
Of what is the 20% they'll focus on that creates the most
Yeah.
impact on your structure.
Yeah. I wonder if there's such a thing called like a deal doula where they just handhold you through the whole journey. Right? Right? Like it's like
That's your best work kit.
can I text? Can I have a person where I engage? I just text them like they say this. Can I say this? Like, do I sound too needy? Like, is this pushback like too much? Like, yeah, I think is there industry for it? Then give me like 0.5% of like the deal structure.
That makes a lot of sense.
Yeah, then like the incentives are aligned also.
Yeah.
That shall be my new role. I'm gonna update my LinkedIn already. I'm gonna be people's deal doula.
Deal doula.
Yeah.
I love that.
Yeah.
Acquisition consultant, lactation expert.
Yeah. So like I think I think these are some tips. Like I think if people are looking to get acquired or they actually have a deal on the table, feel free to let us know. I think we are more than happy to share our experience based on what you are going through. And also post that, right? I remember the day that we signed the papers where I felt like a celebrity because I had to sign like 1 million pieces of paper and we took a photo and we went back to the office and we are still like, okay, money hit our bank already or not? Then we just keep refreshing our bank account just to make sure like money is in. And when the money hit your bank, a lot of people ask me how did I feel at that point in time. I had my own thoughts, but like, how did you feel?
For me, contrast was jarring because it's a huge gap between how I thought I would feel and how I actually felt. Right? I thought that the day the money hit the bank would be
fireworks,
rainbows and fireworks, and leprechauns will come out, and F-16 will fly overhead, smoke show, the whole shebang. Right? You expect that to be the biggest moment of your life. You expect to feel huge. Right? You expect yourself, like, I'm talking about the internal feeling to be like, whoa, this is the best feeling ever. Yeah. That's what I thought would happen when the money hit the bank. But actually, when the money hit the bank, it felt normal. It felt, I wouldn't say empty, but it just felt normal. It just felt like it just felt like a regular day. It's like, if my regular happiness is 5, right? That day felt like a 7. It's not like a 15.
Right. Yeah. I actually felt relieved. Like, I felt like the whole period, the whole due diligence and negotiating, and when like the money hit the bank, like I felt like that weight got lifted off my shoulder. I felt like I went from if my stress level was like a 9, that just like went down to like a 2. And for about 3 minutes I felt happy. And the next thing I thought about was just how do I get the next 25%? And like I was just like, okay, still need to gun for that revenue. But actually thinking back, I think it's more like I was trying to find new things to cling on. Cause the thing that I was clinging on to for ever since I've entered adulthood is no longer there. So then, okay, I still have that 25% to cling on. Let me cling on to that. Like, okay, I still have a purpose, right?
Yes.
And when that 25% hit, and after that whole dark period of my life, of trying to negotiate what is actually warranty and not, I then started to feel like, okay, I have nothing to cling on to anymore. Oh, and that slowly creeped up on me. Yeah. I think that was hard. That's a very entitled. Not many people can understand. I feel ashamed telling the internet how I feel, but like that was hard. Like, oh my god, you have millions of dollars in your bank, but you feel sad. Oh, poor you, man.
It's okay to cry in a Ferrari.
It's true. It's true.
Your feelings are also valid. But honestly, that is the thing that no one prepares a exited founder for, which is the loss of identity and purpose. My own version of this is when we were exit. So we had to continue working there for 2 years. Towards the last month, I was still the CEO. I was handing over. And I told the team, look, this is all that I need to tell you. I'll hand over. This is what I prepared. But hey, afterwards, after I leave, please feel free to call me. Please feel free to call me. I'm happy to help, happy to consult. And for the first month, they did like weekly, someone would call me and ask me something. But by the second month, the calls almost entirely stopped. And I thought I'll be like, oh yes, I finally don't have to deal with this nonsense. But then when the calls stopped, I realized, shit, then what is my purpose that I'm not it is existential, because what's going through my mind is, oh, A, what is my purpose? And B, what the fuck? I'm that easy to replace?
Yeah.
Right? Like, this is a company I founded. I was a CEO. And after handover and after months of weekly call, that's it. I'm not needed anymore.
Yeah.
Yeah, that was existential. I was like pretty troubled about that for a while. Again, it's a crying in a Ferrari problem, but a lot of founders face this.
Yeah. I remember during that period, you kept sending me articles on founders that commit suicide after they exit.
Did I?
Yeah, like you keep sending me tweets. Then I was like, are you saying that's an option? You know, like, but it's right. And the way I describe it, to people, it's, imagine, like, it is the only thing that I've been sprinting with for as long as I can remember. And suddenly you jam break, right? And you know me, like, I'm a calendar type of person. And suddenly it's blank. Like, you can do anything. And I don't think that's a good feeling. Because like, I don't know what to do. And it's very weird because when I was younger, chasing financial security, it was easier because I had a goal, which is I want to be financially secure. There are a lot of things in my life where can be solved by money, like money problems that can be solved by money. And now that those problems are being solved, what do I do? What is this find my passion thing that people talk about? How do people do that? Like, are they born like they know? Because I don't know anything else apart from running a chair company.
Yeah.
I don't know how to do anything else. And the fun part about running it is managing it with people. And now I manage nobody. I don't meet people for a reason. I don't get to see my founders, my colleagues, like, what are we working on? What's the next problem to solve? And I just felt lost. I don't know what to do. I remember that period was when I updated my LinkedIn, say, building the next 9-figure brand.
You jump into the straight rebound.
Yeah, because that felt like the right thing to do. Oh, you're exited founder. Time to chase the next mountain, right? For what? Not sure, bro. Not sure.
Yep.
Not sure. Like, if the 9 figures wouldn't unlock a much higher quality in my life, but to get there, it requires 100% of my dedication, right? And for what? Not sure.
You know where depression risk is elevated amongst what group of people?
What?
Depression risk is elevated amongst a few groups of people. That's surprising.
Okay.
One is exited founder. One is retirees.
Okay. Lottery winners.
One, I don't know about maybe it's not. I don't think so much about lottery. Maybe lotteries winners, yes, but in a different way. The other one is elite athletes.
Is it the gold medal syndrome or something like that? Like the arrival fallacy. I think that's what they call it. Basically, I think what they say is like the silver medalists of Olympic athletes are actually much happier than the gold medalists.
Yeah, that's true. I think that's a lost fallacy or something. Yeah, it's a different thing. What I'm talking about is depression risk post retirement for elite athletes, right? Even if they get a silver or bronze medal. And I think the common theme that ties all of this together is basically a loss of purpose. We are purpose-driven creature.
Yeah.
Right? Like, if your whole purpose before the exit is to make the exit, then what is your purpose afterwards?
Yes.
It's the hard part to figure out. Right? And once you lose your purpose, especially it's not just the purpose, it's the space, the community that builds that purpose. You get lost. You drift.
Yeah. And I think that's why a lot of founders jump back into climbing the next revenue mountain.
Yes.
Because revenue is just an easier metric to track.
Yep.
On progress and whether are you winning.
100%.
Yeah.
I think the takeaway here is it's probably just learn to enjoy the game. Like, you gotta love the game for what it is, right?
Yeah.
Enjoy playing the game and just continue playing it.
Yeah. So I've thought about this a lot during this period. And the tricky part about liking the game that we like, which is to build a business, is that the metric to track is revenue. The way to win is EBITDA, right? And it's just you can enjoy the process of it, but the results, the scorecard is going to be how much money you earn. Yeah. While in other games like relationships, time spent with a family and all these things, the matrix on what success looks like is not as clear. Which is why I think a lot of founders just jump back into building more businesses because they don't know what else to do. They don't know what else can easily show progress.
Because
when
if you
I
were
say
more...
other founders, is me lah. Yeah.
Sure. I have a friend.
Yeah. Asking for a friend.
Asking for a friend. So what you're saying is that, hey, if you were more balanced as a founder, post-exit, you could focus on relationships.
Yes.
Your family.
Yeah.
But the problem with those things is that it is less trackable.
Yeah.
Hence, there's a lot of tendency for founders to jump back into business because that one has a clear thing that you can track in terms of progress.
Yeah.
Whereas family relationship, while important, if you're balanced, you'll be able to find a way to see the importance of it, but that's less obvious, right? You measure the amount of times your kids say, I love you.
Yeah.
Maybe.
just turn on plot forever and like summarize how many times did my kids say I love you in the past 3 months.
OKR, bro.
Am I moving upwards? What are the activities I can do in order for me to X the I love you?
Hey kid, what can we do to make you say I love you?
Yeah. What are some inputs? What are some leading indicators? Yeah. So I think it is definitely a great event to have with an acquisition. I think what the internet probably talks a little bit lesser about is that identity loss. And I don't even think it's just from an exit point of view. I think there are people that are working in a company that has been there for 5-10 years and they felt like, am I really doing what I want in my life? And they quit their job. But then you have a gazillion things that you can work on. What is the thing that you want to work on?
Yes.
That loss of identity is just not a nice feeling to have. But I would say you probably progress pretty well. It feels like you at least you're on a direction of like kind of knowing / testing what do you actually feel passionate for.
Yeah. For me, I guess it's a period of testing and experimentation. Yeah. I think what you're saying also is that it applies in the corporate world as well. People keep talking about retirement, right? And the best thing I've heard is that you're going to get depressed if your sole focus for retirement is that you want to retire away from working, but you don't know what you're retiring towards.
Yeah.
All right. So it's helpful to think about what you're retiring towards.
Yeah.
Right. For me, we didn't know what we were retiring towards, but we are now using the time to figure out what we are retiring towards.
Yeah. People think that after you retire, it's going to be what I hear the most. Travel the world. Then you stay at home and watch Netflix. Like, bro, trust me, you'll get sick of traveling the world. Like, it is tiring. Or at least the way that you're imagining it.
You travel to South Africa, right? Some exotic location. They'll sit in the hotel and fucking scroll Instagram.
Yeah.
Could I have done it at home? Sure. Yeah, but is it more exciting in South Africa? Yes.
The air, Cape Town, different, bro.
Different, bro.
The shark cage diving is just right at my doorstep, you know? Yeah.
So I think that's the part.
I think that's the part. It's a long episode.
Thanks for listening to us whine about our problems.
Yes.
But I'll go cry
my Ferrari. See ya.